So the PCE came out today. And the PCE is supposedly the preferred indicator that the Fed looks at for inflation. So the headline number or the main number came in at 2.6%, which is exactly what the analyst anticipated, and it's exactly what it was last month. Now the core, which is supposedly what the Fed looks at, came in at 2.9%, which is a little bit higher than last month, which was 2.8, but it was exactly what the analysts had expected. In addition, consumer spending came out and it jumped to the highest since March, not that that's a huge thing, to 0.5%, and incomes rose 0.4%. So clearly the market is selling off. Now the question is the market selling off because of this data or any of the data I've just discussed, or is it other reasons? So I took a look at what's going on in the bond market, and the bond market's up a smidge today. Nothing special, just basically giving back what it went down yesterday. So it's kind of dead even, nothing special. So my personal opinion is I don't think this has anything to do with any of the data that we got out today. The income rising a little bit is not a big deal. The fact that the consumer's continuing to spend shouldn't have any effect on this. The fact that the PCE came in as expected should have no effect on any of this stuff. So what I think you're seeing here is just a very normal market cycle. We've had a nice run up here. I think you're going to see some companies take some profit off the table. I think you're going to have some tax loss harvesting. Does that mean that the market's not going to go down a little bit? I'm not saying that. Again, the markets go up, they go down. This is to be a very normal market cycle. I think it has absolutely nothing to do with the data. In general, I think we just have to continue to keep an eye on what's going on in the bond market leading up to the next Fed meeting, because I think that's the bigger issue. If we continue to see the 10-year continue to go down, again, not that it's going to go down every day, but over the course of the next couple of weeks until the Fed meeting, if it continues to go down, I think we're fine to get a 0.25% rate cut. And then we'll have to see after the 0.25% rate cut, how does the bond market respond to that? Again, that's my opinion. Give me your comments. Dickie out.